I've got an exciting video for you today. Whether you like silver, investing, numbers, or even just money, this is going to be a great video for you to watch. I'm going to be going over this article written by Jeff Clark, who is a senior analyst for goldsilver.com. He wrote it in June on the 14th of this year. So it's a few months old. I do want to say that up front. But as I want to show you in just a second, the numbers will be even more dramatic. So they're even more astounding. I mean, this is mind-blowing numbers right here. So let's dig in. It says the stock market bubble continues to inflate while the price of silver remains range bound. A reversal in those two asset classes is coming, and based on history, it could be one for the record books. In fact, you might want to refrain from sipping hot coffee while viewing the tables below. I totally agree. It's just amazing information. That's why I wanted to get it out to you guys. This is a chart that shows the ratio, as you can see over here. In 2021, we are at an all-time low. Silver's high in 1980. It spiked up and went up a lot. So this is basically silver is worth a lot when compared to the S&P 500. And then it's been down, pretty much ever since. It says only at the beginning of the new millennia has the ratio been lower than it is right now. You can see where it has peaked in the past. Compared to today, the ratio was 4.4 times higher in 2011, 13.3 times higher in 83, and a whopping 62.5 times higher in 1980. Now remember those numbers. You don't have to remember them, but we're going to be referencing those numbers as we continue. Thrills for silver, chills for stocks. The following tables show what would happen to the prices of silver and the S&P 500 if the three ratios above that we just went over were to be hit from current levels. To keep it simple, the tables are calculated from $4,200 for the S&P and $28 for silver. Now, just to show you why the numbers will be even more breathtaking if it were calculated today. He calculated the S&P at 4,200. Right now, it's over 4,500, 4,530. Silver, he calculated at $28. Silver right now is $24. So again, the S&P is up higher and silver is lower. I mean, that would make a huge difference. I would be interested in doing the math, but we're going to just keep it as he showed in the post going back to June. All right, and this chart right here says a lot. So it says, first, if the ratio returned to its 2011 high of 0.038, here are the various prices for silver and the S&P 500 we could see. And so this is just giving you different silver prices, and then based on that same ratio that it hit in 2011, silver would have to go down, S&P would have to go down 88%. So basically to hit that same ratio, you'd be looking at the S&P that's almost 100. 88% is a lot. It's a big steep decline. But that's not very likely, right? We're not going to see both of them decrease to hit that ratio. Odds are they're both going to go in one direction. Considering that we're having all this inflation, I would say they're probably both going to go up. And this is one of the things that's going to throw people off. You can have something like a house go up in price but down in value, especially when you compare the price to other assets. So if a house goes up 10% in value, but gold or silver goes up 50% in value, yeah, the house went up in terms of dollars, but down in terms of the price of the metal. So, so if we were to see, let's say, $50 silver, that would be a 78% increase from here. But still, in order to get it back in that ratio, the S&P would still have to drop by 70%. Again, these numbers would have to be higher. The S&P would have to drop more than 70%. And that's with silver at $50. So silver would have to hit $200 before the S&P could avoid any losses. So, so like let's say if the S&P didn't go down, let's say it went up 20%, for silver to hit that 2011 ratio, silver would have to be $200. This gives you an idea. But what if it doesn't go up to 20%? What if the S&P goes up 200%? Then in order for silver to hit that same ratio when compared to the S&P 500, that would be $500 silver. So I could actually see that happening. 200%, especially with all this money printing, that's in the cards. I mean, I would have liked to have seen them take this chart out one step further, but even with just these numbers, you're already seeing huge gains in silver, almost 1,700%. That's 17x your money, and that's only with the S&P going up 200%. All right, so let's keep on going. Now it says, while the scenario is sobering, it only gets worse for stock investors. Here's what silver and S&P prices would look like if the ratio matched its 1983 high of 0.1. So if we saw $50 silver, the S&P would have to decline by 88%, 88.6. I mean, that's extremely high. I mean, I'm not gonna rattle off every single one of these numbers, but you can look at the tables and see for yourself. If silver only went up to $200, the S&P would have to decline by 54%. So these are scenarios that could happen. It could be somewhere in between. We don't know, but odds are it's going to hit a comparable ratio to what we've seen in the past. First of all, I don't want to go too much into silver here, but silver is in much higher demand today than it was back then. It also is in less supply. We've been having a deficit. We're using a lot more. People are buying more. So the amount of the silver supply has been decreasing, whereas before it always increased up until recently. So you've got demand increasing, supply decreasing, plus one more aspect I'll name with silver. The rate at which we're mining it out of the ground is decreasing. I think by like almost 50% just in the past 10 years. So for every ton of rock that's mined, before they were getting maybe, I think off the top of my head, I think the number was about 14 ounces of silver for every ounce of gold. Well, now we're only getting about 7 or 8, depending on the mine. These numbers vary. But basically the high-grade silver mines that we've been mining in the past are drying up, and it's getting harder and harder to find silver. So going into the future, its new supply coming onto the market from mining is going to be less at a time when demand is even higher. So even without putting in these supply and demand changes into the future, these numbers are breathtaking. So let's say, in order for the S&P to not have some crazy decline, we'd have to see $500 silver. That means, if we only saw $200 silver, the S&P would still have to decline by 54.5%. I mean, pick the scenario that you think is most likely. Either way, it looks like silver has a long way to go up. And I've got one more big aha for you at the end of this, so don't go anywhere. If you're watching this, stick to the end because this is an even bigger opportunity. Right now, we're talking about 1,700%. We're getting ready to go into higher gains than that. And then at the end, I'll tell you how you can even multiply it on top of all of that. All right, so look at this one. Now, this is the last table I'm going to show. It says it's a rematch of the 1980 high. All right, so that, look at all these. Basically, even with $500 silver, the S&P would have to go down to 1,100. That's a 74% drop. That's even if silver were to go to $500. In order to hit the historic ratio it hit in 1980, the S&P would have to go down by 74%. Again, these numbers would be even more dramatic right now because silver's less and S&P is higher. But again, you're still looking at, a 1,700 gain, while people that are in the S&P lost 3/4 of their wealth. I mean, this is absolutely shocking. Now, of course, if the S&P doesn't go down, but instead goes up, then we'd be looking at much, much higher than $500 silver. In fact, I would have loved to see them break this down and even further because the numbers would be mind-boggling. And I think that's probably why they didn't. They didn't want to get off in La La Land and, kind of ruin their credibility and get people thinking the wrong thing. So these are realistic numbers, is what I'm saying. I think these are realistic. I mean, we just showed you their historical precedents. So if these things, oh yeah, look, this is what I was getting ready to emphasize. I looked down. All these ratios have occurred before. So we're not talking about some brand new event. We're talking about it just going back to the means it went to in the past. Now, what if because of some of the supply and demand issues I just mentioned, the fact that this is the first worldwide currency crisis that we're on the cusp of, I mean, there's a lot of factors that are playing into our current situation that weren't even there when these other times happened. So what if it went to an even more dramatic ratio, which is certainly possible for many different reasons. I mean, it's hard to say how high silver could possibly go, especially with how crazy, we've seen things lately with, we've got lumber prices quadrupled, for almost no reason, just supply chain things and stuff. I mean, there have been all kinds of oddities in the market and everything. The silver story is one to not sleep on, all right? But one thing I do want to point out too, this is the big thing I was telling you just a minute ago, how you could even multiply the gains on top of that. So going back to $500 silver, that's 17 times your money roughly. That's not bad, especially if you can do it in a few years. That's amazing return on your investment. And of course, it could be much higher than that. But what you could do instead of just buying physical silver is buy silver stocks. Silver and gold stocks are basically a way to get leveraged access to the upside potential in the metals. So like let's say, if the price of silver doubles, maybe the price of a silver stock would triple or quadruple. It may even go up 5 times compared to the price of the metal going up 1 time, doubling. So, then you would be multiplying 17x your money times whatever multiple you want to throw in that number. So even if it's 3 times that, 17 times 3 is 51. So you turn $1,000 into $51,000. And this could, it could be, the numbers could be way bigger than that. But these are real life numbers, just looking at, the past, doesn't mean it's guaranteed to happen, but it's probably going to be in the ballpark of some of those numbers. And there's perfectly good reason to suspect that it may even be more dramatic than any of the tables shown in this article. Now, of course, as always, I will link to this article in the description below. If you have any questions or anything to add, let us know in the comments below. I'd love to see what other people think about this. Is there something I'm missing? And if you like this type of content, financial and silver, I've actually been thinking about creating my own channel that focuses more on this type of content. If you think that'd be a good or bad idea, let me know in the comments below. I can just keep doing them on this channel, but I've been thinking about focusing more on the financial. So let me know what you think about that. Thanks for watching all the way to the end. If you're one of the few people that watch this all the way to the end, I would assume and guess that odds are you're much more likely to succeed. So thank you so much. I think life will favor you, and I wish you the best.